Hello and welcome to episode 18 of the Philanthropy Impact Walk in My Shoes series. For those of you new to this series today, we have set this up as a weekly international panel discussion to support our members and wider networks since the start of the pandemic. As an organisation, we aim to bring together people in the world of philanthropy, social investment and impact investing to share, learn and collaborate. We specifically work with professional advisors to ultra and high net worth individuals to support you in helping your clients to create impact with their wealth, based on their value system and really enhancing your client service offer. My name is Sophie Sahanek and I'm the Director of Training and Development, and if you'd like to know more about the services we offer, please get in touch via the chat today. This episode, we're discussing the future of impact investing, issues and the opportunities. It gives me great pleasure to introduce our chair today, John David, Head of Rathbone Greenbank Investments, who's having a few technical issues, so he'll be on voice only. And joining him today is Dr. Céline Chi Hae Wong from Global Citizen Forum, the family business Jinko Solar and UBS Digital Strategy. Also, Heiko Specking, founder of specking+partners and one of our trainers, and Chandler, investment associate of Nesta, the Innovation Foundation. As always, this is a strictly 30-minute recorded session. We ask that you remain respectful of the conversation, the panel and each other. Please use the chat function to introduce yourselves, leave comments and ask questions to the panel. We'll do our best to get through them today, but if we can't, please join us on the LinkedIn group after the discussion, where I'll post unanswered questions and you'll be able to find a recording of today there as well. We'll share the link in our chat. I will now pass on to John, if he's still there, to make a start. Thank you, John. John? I can hear someone frantically typing.
Who's typing? Okay, Heiko.
Yes.
Heiko, we have the investment return continuum up here. Could you just do a quick overview, because the topic for this one is the future of impact investing and related issues and opportunities. So we're not talking about what people did during COVID, but more about what the future holds for impact investing. And this continuum up there talks a bit about some of the different aspects of this. Can you just give a quick overview?
Yeah, I'm glad. This is like, I mean, I love the spectrum because it sort of shows all the entry points where you can make a difference through investments or donation with an impact. But again, as you said, how does this change and how will this spectrum sort of now take new shapes and forms in the month and years to come? And I think we see a little bit of a change there already. So to go to this continuum is you see the philanthropy and the venture philanthropy, like sort of the through donations to make a difference, but also sort of like encourage entrepreneurial solutions through a donation first, which then might as well lead to returns. And then you have in the middle part, you have the social investment and so-called impact investment, which gives you the opportunity to deliberately target your investments towards projects that sort of really make a difference within their specific fields and spaces. That might be climate related, that might be societal related, it also might be theme related like water or agriculture. And then further to the right from my screen here is the SRI ESG, and today you would also add the Sustainable Development Goals criteria as an investment form to go into more broader mainstream investments that sort of been put up on the stock markets, where ESG, environmental, social and governance criteria, are met by the companies, are followed up on the companies, or sustainable development goals are sort of supported, that you can sort of go really in these topics. And the beauty about the Sustainable Development Goals is that the 17 Sustainable Development Goals are underlined by 169 sub-goals, and these sub-goals are relatively concrete, so it gives the opportunity to take good measures, and so you know the performance along the criteria that you're interested to support.
Thank you, Heiko. Céline, in terms of responsible investment, what do you see are some of the key future trends and the way forward?
Well, I mean, the whole spectrum is extremely wide. I love the title of today's talk where it says, walk in my shoes. And in particular, being like a millennial and a family member that is very active in the social entrepreneurship, philanthropic engagement, I want to share that actually there are so many investment opportunities, and yes, there are the SDGs that categorize it all very well. But I think ultimately, in really to order shift the needle a little bit, is that actually everyone lives their lives themselves holistically in a much more sustainable and environmentally friendly way. So if I can openly share a little bit in what fields we are often engaging with. So not only we're coming from a renewable energy family business direction, meaning that we're doing our utmost very best in order to create clean energy, and also in our, and it starts actually with our production side, right? Like, so we're looking at the resources, trying our very best not to exploit the nature too much, or also contribute to initiatives that actually also helps them to reground, regrow it in a much more resourceful way. And most importantly, the things that we look at are full transparency in many of the projects that we're involved in. And not only that, but also what matters a lot is reporting. Because yes, there are so many ways of reporting and looking at it, and which I think also John will elaborate that a little bit further later. But it's not just finding grants and put them correctly somewhere, but it's also continuing to also have a crystal clear allocation and distinguished allocation of where the capital is going. In the end of the day, often we tend to find that projects have been not necessarily like overfunded, but it has never been clear where the money has gone to. And any organization that shows that where each pound that you had spent has gone to, then it gives also the donors a much, much better comfort and feel to what impact that has created. And coming to what impact is important to each family is an individual decision. Some look at it, how many lives have we changed? Some look at how many CO2 footprints have we actually saved? And I think if I can speak on behalf of my family in particular, we actually look into how many lives can we change in a longer perspective? Because yes, education is extremely important, but we also think further in terms of once a child has obtained a piece of education, will they be able to actually find a job afterwards? We love the principle of what I always call teach a fisherman how to fish. So not only you give them the potentially better start in life that they would have not received otherwise, but it's more into how can they change their life for better so their families and their immediate community will also gain further benefits from it. So if I can point out one project in particular that we highly support is the Smiling Gecko village that's based in Cambodia. So we partnered up with a gentleman called HNWI, who's the founder of this organization. And we just love the fact that not only it has a school where children from as little as the kindergarten age can start to have a better start in life, but they also receive basic hygiene as well as their meals at this particular education center. And now, especially during COVID, we came across and found that a lot of other fellow donors had reduced their grants, but especially in COVID, it's so important that we all stick together and have helped those in less fortunate and less developed countries.
Samantha, are you seeing differences between your peers and yourself and the older generation in terms of moving to impact investing in general?
Differences maybe in the sense that now that I'm still a full-blown millennial, so I'll let you all guess my age. The difference is probably now in our generation, we have much, much more access to technology and communication. So in terms of reaching out our peers and merge our energies together, it works in a much faster pace. So given another example, for example, is that recently in COVID, when the first outbreak was, a group of peers and friends who are also Asians, but they live overseas, within a short time spans, managed to fundraise 5 million to actually help in Greater China and almost immediately in Wuhan to actually have access to mask and hygiene articles. So that happened within less than 10 days, actually. So I would say our way of communicating is for sure different compared to the generation of our parents. And also what I find a difference that we have is maybe, especially in philanthropy, millennials are a little bit more discreet and quiet about this. But I find that more people in my age group are raising their voices, especially being female. Like, we try to claim more our seat at the table, and be now invited to these philanthropy conferences. We still feel like we are the younger crowd that joins us, and that's nice. Very, very positive to see that. Also younger ones attending.
Well, that's good. Thank you. Because next week for our Walk in My Shoes, it's all around gender equity. So, Ton, and we're going to be talking about gender lens investing and stuff. Heiko, I want to come back to you about what you were saying about the difference and stuff and the role of advisors. Before I do that, it sounds like I'm really prepared, doesn't it? This last second. Leo, here with Nesta, what role in that continuum, where does Nesta fit in that, and what is it trying to do? And I understand there may be some reviews or something going on, and what impact you think that's going to have in the future of you guys just strictly doing impact investing. What does that mean?
Great, thank you, John, and hi everyone. So Nesta is uniquely placed in many ways within the impact investment market. Is, I guess, as an innovation foundation, impact investment within Nesta is seen as what we would call an innovation method, and as an innovation method, we think impact investment is specifically well suited to scaling specific forms of social innovation that are best suited to investment as a route to scale. I guess one of the fortunate things that Nesta has is an endowment fund of around £450 million, and around 12% of that endowment fund is allocated towards impact investment activities, which I think is a significant amount. I guess the type of investment that we do on our team, I would say within that impact investment continuum, is on the commercial end of the spectrum, in that what we really try and find is those opportunities where the revenue that a company generates and the impact that it has is truly aligned. So we really look for that alignment between the business model and the impact that they have, because for us as early stage investors, we're aware that there is a particular role that you play in shaping the future economy of kind of 5 and 6 years time. And we know that the businesses that you invest in now are likely to look very different in 5 to 6 years times. And we genuinely believe that if we think that those companies are going to have significant and scaled impact over time, then that alignment question is really important. So I guess for us at Nesta, we have our investment activity, which is the earlier stage investment that I work on. But Nesta also has an endowment fund, and the endowment fund also sits within that continuum around the kind of SRI and ESG piece, in that Nesta looks for best-in-class ESG performance of its fund managers. We exclude tobacco and controversial weapons from our endowment fund, and think, we see that there, as a charity, you have to be thinking about the impact of your endowment fund beyond just the allocation of how it is invested. And yeah, I guess, for us, impact investment is an innovation method, and along the innovation spiral, Nesta tries to do as much as it can, from policy making to grant making, and impact investment sits within the middle of that innovation spiral in trying to scale particular social innovations. And we hope that can be done successfully over time.
Okay, so you mentioned, maybe I misunderstood, 12% of your endowment fund is in impact investing, and the rest is in negative screening, or is that 12%?
No, so then the rest is in, so a big portion of the endowment fund is invested in kind of public markets, etc. The 12% is in relation to the allocation. So we have a direct investment team that I work on, which invests in seed and Series A ventures in education, health, and GovTech. But then we also have a arts and culture finance team who have a impact investment fund specifically focused on supporting arts and culture organizations to support the creative industry.
And is it a form of blended finance that they use? They're using both grants and...
So the arts and culture finance team, they are a debt fund, so they provide loans. But the investments team that I work on is equity investments in seed and Series A.
Okay, and there's a campaign on now in the UK, for example, where charities have large endowments or trusts and foundations. And from what I understand, a lot of them are still investing traditionally with some negative screening. What role are you guys trying to play in helping to move them more into impact investing? And Céline, I want to come back to you for a second around this whole topic, and in terms of your family and its investment and your peers, are they shifting completely away from negative screening into real impact? So I'll come back to you in a second, and then maybe Leo can answer that question I asked him. So, sorry, Leo.
Was that me first?
Yeah, I'm multitasking here.
So I guess for us, we already have a responsible investment strategy for the endowment fund, and I think we look to people like the FB Heron Foundation, who we see as real kind of market leaders in the space around the question of mission-aligned investing. And I think for me, one of the interesting kind of unexpected, well, for some it was expected, but for many it was unexpected outcomes of COVID has been the supposed outperformance of ESG and SRI funds compared to some of their non-SRI and ESG comparable funds. And I think part of the obstacle for many foundations in the UK and the US for moving, say, their endowment funds towards more kind of socially responsible investment funds has been a misconception about the financial risks that are involved with making those decisions. And I think part of what's happened with COVID has been a really strong performance from more social investments funds, which I think may have a knock-on effect on the broader sector. I'm not sure if Céline would agree with that.
Céline.
Yeah, well, I think lately, I mean, also working in the financial industry in my day job, I've noticed that now a lot of the banks and insurances and investment funds, they're all moving into the wagon. Wow, we all need sustainable impact investing funds, and there's so much talk about it. And yet, personally, I find it's always been around, but it's just never ever been so much branded and marketed as it is now. And of course, now through the SDGs from the United Nations, that coloring, I remember 5 years ago, I got asked whether that pin was a logo of a fashion brand. So I think now the awareness of people is a lot more present. Hence, in terms of our personal investment size, strategy has never really changed. And if you always have an approach that you go with an investment knowing, of course, that you're not doing anything harmful and negative, and you wouldn't go into nuclear, then I wouldn't say that it's something new to us personally as a family or myself. I also see with my peers that they also now speak to many banks and ask them about what their investment fields are. And now I still feel a huge disconnect of the understanding what SI and sustainable impact investing actually means. It's not only exclusion, right? Like, it's also in how to look in particular the portfolios companies are acting and behaving themselves. So it's a lot more cumbersome and complex than just opening a new investment portfolio then just brands it in green bond or so. And yeah, so just thinking amongst my friends, I would say everybody is a lot more mindful that there's also the obligation to the families, as in parents or grandparents who gave the money to invest in, to also report back in how they have done. So if I think back of my own journey, I almost, how shall I call it, had a bit of an investment game with my dad, which was actually a bet that he allowed me to allocate some of my own personal assets and said to me, well, if your portfolio does well and you can prove that also this company fulfills their goals in the social part, then I will actually double on your next investment. So that was actually a good way for me to learn what I have to look out for, and working very, very closely with the family officer, and then learn to go down that journey path myself. So I would say, in short, definitely an increase, but it's nothing rocket science, it's nothing new. It's just, thankfully, through the initiatives of little Greta Thunberg and everyone, that now that also finally the banks are a lot more aware, and now creating products around it, and also consult their clients accordingly.
Heiko, I mean, we deal with a lot of professional advisors, some of whom are really quite responsive to supporting their clients on their donor journey and their impacting journey, but also talking to them about their values and what motivates them. What are you seeing in terms of impact investing and the role of advisors, and what do you think advisors should be doing, especially when Céline talks about millennials and her peers and what they're doing?
Yeah, I much agree with what you, Céline, said as well about the behavior of millennials to engage, and they're much more value-driven to engage, but sort of like not so much outspoken and sort of make a big buzz about it. The other thing is that impact investing in a way has existed already for long. It's just now we call it impact investing, which is also a trap, because it sort of becomes a label that sort of a lot of people hide and sell products. And if you really look closer at what sort of impact they perform on, or they put into their books, it doesn't really make a difference. And sometimes it's even negative if you look twice. So I think it needs the role of an advisor to ask these questions together with the clients, to accompany the client as well in that journey. And I cannot emphasize enough, and as well you mentioned, Céline, is this is a journey and it starts. So if you've had the opportunity given by your father to sort of like, hey, try and error. So if you're good, to give you more. If you're bad, okay, you've learned. And sort of do it with sort of relatively lower sums that actually make sense, because the learning is sort of inherent and you usually don't do anything really bad or stupid. But the same thing I would say on the philanthropy journey and anything in between. So the advisor should be able to guide that broader dynamic with the client. And even more so today, it is the values that come into the room. It is the visions that a lot of the millennials have, but very few actually ask him, what sort of vision do you have? And a lot of the people don't actually are clear either of their values and or their visions, and don't understand yet how powerful it is. So the role of the advisor is crucial, but it's not only something that sort of goes through the list of questions. It's something that the advisor also needs to do from their heart, and that's something that I see still missing. So how do you really engage in a way to formulate these engaging questions together with the client and create this emotional basis to actually be able to do something? Of course, the banks have taken up on the topics, but they have done that already 15 years ago, and they sort of hopped on and off. So we will see how the advisory from the bank sides now sort of really becomes part of their client company strategy.
Maybe if I may add to that, there are also like courses. So I think it really depends on if your personal circle of friends are also active and interested in that field. So for example, at Harvard, they have the PRI, Principle for Responsible Investing course, and where I have a very good friend who actually co-founded this course, and everybody who attended it is so much more clearer about where the money is going, what that impact is. And I think now banks are slowly understanding that they also need to train their client advisors in the understanding, oh, what does that actually mean? Does that only mean because I'm changing my paper to recyclable paper, that means, you know, it's already shifting the needle? No, it's not. It's actually really creating the awareness that, look, if you invest in these blue chip companies that are huge, clearly they are not so mindful about where the resources are coming that they need to use for producing their goods. But it's slowly getting there, especially, so I'm based here in Switzerland. The University of Zurich has an amazing institute called the Center for Sustainable Finance. And I'm so happy that they actually offer courses for client advisors to attend and actually teach them, hey, what does it actually mean? They even teach them how to pitch this in front of their clients. Because in the end of the day, of course, they have to make, banks will need to make their revenues. And yet there's still a disconnect in terms of, how shall I call it, the quick sell of a green bond fund versus selling a classic real estate fund or a hedge fund, because this is something that the client advisor may have sold for years and years and gets his bonus on top of it. So I guess the remuneration for that needs to be made attractive for the client advisors to place the green bonds or sustainable impact investing funds with their clients, so that get actually beefed up a little bit more.
It's interesting. Sorry, go ahead, Leo.
So no, I was just going to kind of add, and I'm sorry, there's probably 3 additions in a row, which, John, I'm sure you've got a question, but I think kind of just one reflection on what's been said. I think one of the potentially interesting opportunities or roles for professional advisors is, and I don't think it's so often reported on or spoken about, is how a major foundation would go about constructing a investment portfolio that meaningfully aligns with their charitable objectives. Because I think you can have a socially responsible investment fund, you can have an ESG portfolio, but the extent to which that underlying portfolio meaningfully contributes or doesn't contribute to the kind of underlying mission or charitable objectives of that organization, I think is pretty hard to do, but I think is an important thing for people to at least aspire to do. And I think that then, you know, falls into the often spoken about but complex issue of impact measurement and reporting, etc. And I think in terms of kind of future work to be done, I think tools that can meaningfully measure the extent to which underlying companies negatively or positively kind of align with your charitable objectives is a kind of future piece of work that I think is really interesting to be done and explored further.
It's interesting now, Leo, when you talk about the investments done by trusts and foundations and charities with large endowments. I mean, on one hand, they're doing good by handing out a lot of money to address some kind of societal problem. On the other hand, they seem, many of them are just doing negative screening and therefore could be doing harm that counters the two. And there's a push now to try and get them not necessarily to invest according to their mission, but to invest in terms of achieving impact, which means that you're doing good and doing good simultaneously. Heiko, do you have anything to add? We're getting close to our time. And I'm sort of thankful because I wasn't supposed to be chairing this tonight.
What I think is important to look here, and I think you're all aware of that, and it has been sort of bubbled up with your comments and ideas, is that we go into a new phase of what does it mean, where we need money, how do we match the right sort of money with the right sort of project. So I think there'll be some changes coming up in the field of impact investing that we have to closely observe and sort of, I always say, sort of co-develop and co-create, because we have a bit more experiences than probably others, but we certainly don't know where this is all now going and what is needing most to also support more the societal, more the environmental problems and so on. But also the things that also the flag that I put up is, how do we more embrace the complexity in this? How do we better put the context into the decisions that we make about investments? And that's something that I don't see yet really sort of being implemented a lot.
Okay, so we have 2 minutes, but there's a question from Megan Andrews. Can you see that question on your screens under the chat? It's it talks about with thank you so much for your insights. It's really that's really interesting. With growing popularity, or at least marketing, of impact investment, is there a trend of people allocating funds that would previously have been philanthropic gifts towards impact investing instead? Is one or the other for clients? Céline, do you want to take a quick crack at that? Because you and your peers are involved both in impact investing and philanthropy. Do you see impact investing taken away from philanthropy?
No, it's not. I think it really depends on how your personal investment strategy is, right? Like, so for example, what we have done as a family, we also co-founded one investment fund where we said we will allocate the next 5 years returns into the family foundation. So that we said it's going to be like an evergreen philanthropic contribution. And yeah, I think now generally it's the big misconception that everything what they previously called, oh, this is a philanthropic donation, and now just call it an impact investing with some profits that are coming back. There's often this juggle with these two big words, right? And we shall not put them all in one basket. Okay. And as a family, we have divided it quite clearly that one is an SI fund and one is pure philanthropic charitable bucket that of course then plays roles in our family values, and that's how we actually choose projects moving forward.
Okay, so as chair, sorry, I'm just going to interrupt you for a second. So as chair, we're out of time, but I'm going to still ask each one of you in 30 seconds to give the final words of wisdom. So Leo, would you like to go first? Final words of wisdom around this topic and encouraging people.
Yeah, so I think what's so exciting for me about impact investment is that impact investment for me is saying that it's really placing a bet on the future economy that we'd like to see. And as an early stage impact investor, we really believe that the companies that are going to outperform and outshine in the long term are those that think more comprehensively about the impact that they have, but also the value that they create for people and planet. And I think as a result, that's why it's so exciting for us, both from an impact but a financial perspective.
Okay, great, thank you. Heiko, final word.
Yeah, it's about really sort of tell the stories of the learning curves of those who are involved, to engage with those people who haven't yet sort of had the chance to go either on the philanthropy side or on the impact investing side, and be really courageous and respectful about what we co-create for what there is to come.
Okay, thank you. So then next the final word, and then I'll say something.
Okay, well, I would just simply say, do good, be good, lead by example, and just be mindful about your daily lifestyle. Because if you support the little grocery shop in your neighborhood rather than a huge chain, that already contributes something immediately already. So I wouldn't even want to put everything so big in big investment stuff, but it really just starts with tiny little steps.
Well, that's terrific, thank you. Advisors, listen, because you have a significant role to play. And if you don't start to shift some of your work for some of you, then you're going to miss out. How's that, Heiko? That sort of a good message? I think, Leo, what you were talking about in terms of tools and the need to develop tools is really key to the success of this, because there's still issues around measuring impact and what do you do with companies that have multiple divisions and that kind of thing. And Céline, sorry, I thought you were Céline Dion there for a second. Céline, thank you for joining us and for sharing what your family's doing. It's really quite inspirational. Thank you, Heiko and Leo. I'm glad it's over now. Thank you.
I'm just going to say apologies to everyone for the technical issues. In this format, we are in the hands of the internet providers. John David did send his regrets to you all, and thank you to all the panelists for carrying on, and to John Pepin for standing in at the last minute and doing so brilliantly. Thank you, John. Next week, the Walk in My Shoes it will be the last one before we take a break for the summer, returning with a flourish in September, and we will be discussing women of wealth and gender equity, what professional advisors to ultra and high net worth individuals should know. It's going to be a really big but very important topic for us to be discussing. Thank you all again, and hopefully see you next week. Bye.
Yeah, bye.